There are so many myths when buying a new home, so here's a few facts that I bet you didn't know. Did you know your gift donor can gift you from a variety of sources, that where even one of their sources can be a loan to them and then they give you a gift? Did you know you could do a conventional loan with 3% down payment? Or did you know you can have a gap of unemployment and still have a 2-year employment history? Did you know that you don't need tax returns if you are a W-2 employee? You guys, first off, grab your pen and paper because I'm about to demystify everything you need to know about loans. I know there's so much information out there, and I know majority of people do not even make it to the application phase because of all the inaccurate stuff. Before we talk about how to get you pre-approved, which loan programs will be best for you, let's talk about how the mortgage process is so easy. You guys, we close mortgages in 9 days. 9. And let me break down the series of steps that happens in those 9 days. So you turn in all the required documents and then we'll get you pre-approved. Then you find the house that you love, you go under contract. Then we'll order the appraisal, we'll order title. Then we'll submit your file to underwriting. And then the underwriter may condition for additional items and we clear those underwriting conditions. We receive your appraisal, we make sure your title work is good, and then we send your file to funding and then we meet at the closing table. That is it. I guess I just named like 13 steps. So that is what you can expect when you buy your next home. For this video, we'll use the assumption that you are a W-2 employee. If you are self-employed, I do have a video with exact steps on getting approved for a home loan. Now, your very first step is to compile your docs so you can stay ready. Last 2 years of W-2s, last 30 days of pay stubs, last 2 months of bank statements, and a photo ID. We do not need tax returns unless you have rental properties, in which we'll need to see your Schedule E. Otherwise, no. Let's talk about the income piece first because the requirements are pretty consistent across the loan programs. So you do need a 2-year work history. However, the guidelines do not say at the same job. It does not say continuously. And it does not say you couldn't just fall in a ditch one day. Life happens and you shouldn't be penalized for so. Let's say within the last 2 years, you had a baby, so you were out of work for 4 months. So you're like, oh my gosh, I don't have a 2-year work history. Yes, you do. What we're going to do is that gap, that 4 months that you had off, we're just going to go further back in time and grab another 4 months and then add those together. And that is your 2-year work history. That is it. This is one of the most misinterpreted guidelines ever. So next thing on our list is cash. We need cash to cover the down payment and the closing costs. Now, the down payment can range from 0% on up. And then your closing costs, to be conservative, I always like to say 3 to 5% of your purchase price will be closing costs. Now, majority of your closing costs are based on third-party fees such as title, appraisal, taxes, insurance, and then there are fees imposed by the bank, which can range from a flat underwriting and processing fee with me, or it can be an underwriting fee, origination fee, processing fee, funding fee, wire fee, credit report fee. Listen, the cash piece is so important because you can have a $300,000 salary, but if you don't have the cash to cover the down payment and the closing costs, it just simply will not work. It won't. You can have an unlimited amount of income, but we absolutely need the cash to close on your home. Now, there are a few ways to get the cash that you need. So depending on the loan program, you can get a gift from a family member to cover the entire amount. But also, did you guys know, you might want to come closer for this one. Did you know that the gift donor can get a loan for themselves and then give a gift to the home buyer? Only sharing this type of information because number one is public information, and number two, so you can share it with another person. Because listen, what if it's a parent's dream to be able to gift their child money to buy their new home? And let's say if that parent, for whatever reason, is not in a position to do so at this moment in time, we just created a solution. Gifts should be actual gifts. They should not be a loan to the home buyer themselves. But by all means, share this gem with a parent or a gift donor who may feel that they're not in a position to help It can help. Another way to grab some extra cash is to tap into your 401k. Think about this. It's your money, but a stranger manages it. And then if you're lucky to be alive, when you're 59 and a half, then you can touch it. Head into your HR office and ask them for a loan from your 401k. I know you are more than capable to manage it yourself, especially for a time like right now. Some of the benefits of doing a 401k loan is the fact that it's not subject to income tax, we don't account for it in your DTI, and you pay yourself back with interest. The last way to grab some extra cash is to ask for a seller's assist. You absolutely can ask the seller for money up to 6% of the purchase price, and you'll use that money towards your cash to close. I don't know if something is in the water with certain people, but do not ask me if I'm about to do a hard pull or a soft pull. Can you imagine going into Chase Bank and asking them for money, but then asking them, what kind of credit are you about to pull? Think about this. People will go and buy a new BMW, they'll go buy a new credit card, they'll buy a new iPhone, and they will never, ever ask about a credit pull. But when it's time to buy a whole house, some of you guys are on the phone like, is it a hard pull or soft pull? Ma'am? So all I'll say is if your lender is not doing a hard pull, they are not doing a complete application, which is room for your deal to fail. So comment below if you guys would like me to drop a video all about credit, because I do have a whole lot to say about credit pull, credit score, credit utilization. What kind of credit score do you need for a mortgage? I will say we go up to 850. Now, we can go down to 580, and you can go even lower than that. You can go down to a 500 if you put at least 10% down. But I think that if you have 10% of the purchase price of a home plus more, and you have a 500 credit score, that's a different conversation. If you like some help to improve your credit score to purchase your new home, by all means comment below non-sensitive things, and I can tell you exactly what to do for free. We don't need to go to the credit repair people. I'm sorry, I love you credit repair people, but at the same time, we can do this on our own. Let's get into some of these loan programs, and then we're gonna break down a few more things, and then we'll wrap up. Conventional loan. No, you do not have to do a 20% down payment. Conventional, you can do as low as 3%. We can go down to a 640 credit score. We do allow for 3% seller's concession, and you can get a conventional loan 4 years after Chapter 7 bankruptcy discharge. The next loan we're going to talk about is the FHA loan. Now, FHA loan is amazing for house hacking. You can buy a 1 to 4 unit, all with only 3.5% down payment. We do go down to a 580 credit score, and then you can ask for up to 6% seller's concession, and you can get an FHA loan 2 years after a Chapter 7 bankruptcy discharge, and you could be on your way. Next loan up is the VA loan. Now, the VA loan is one of the best loan products out there because there's no mortgage insurance, and you can do a 0% down payment. Thank you to my veterans for serving. This one's for you guys. Down to, actually, there's no credit score requirements for a VA loan, by the way. There are no debt to income requirements for a VA loan. You can get up to 4% seller's concession with a VA loan, and you can get a VA loan within 2 years of a Chapter 7 bankruptcy discharge. And the VA loan is great for house hacking because you can purchase 1 to 4 unit homes with the 0% down payment. Now, the USDA loan is another 0% down payment, and contrary to what most people think, it is not always rural. There are a couple of neighborhoods you'd actually be surprised by which neighborhoods qualify for a USDA loan. So you can log on to their portal and enter an address, and you can see as such. The USDA loan does allow up to 6% seller's concession, and they go down to a 640 credit score. And then you can also get a USDA loan 3 years after a Chapter 7 bankruptcy discharge. Now it is time for you to get pre-approved, and you're going to get pre-approved on those 3 things we talked about. So the credit, cash, and the income, and most importantly, what type of monthly payment you like, because that is what you're going to feel day in and day out. I never, ever, ever ask somebody first, hey, what purchase price are you looking to get? So you guys know what all these numbers mean, but you want to add mortgage insurance to that principal number, because whenever you put less than a 20% down payment, every single bank has to hedge themselves because they have way more skin in the game than a home buyer. So for that reason, the bank will always charge you mortgage insurance. Now, listen, it's required by the mortgage guys, aka the government, so it is what it is. And depending on your financial profile, your mortgage insurance can be either really cheap or it can be very high. However, there are options to this, and if you have the extra cash, exploring your options may save you money. So, for instance, you can pay your mortgage insurance up front in a lump sum, or you can pay it monthly like many do, or you can do a split premium, or you can even do a lender paid mortgage insurance. Last but not least, let's wrap up with the do's and don'ts, because these are the things that lenders really, really, really care about, not what everyone who's not a lender, they say. We do not care about your debits on your bank statements, but we do care about your large deposits. Now, depending on your loan, that can mean any deposit greater than 1% of the sales price. So don't worry, we're not judging you on whatever you're spending money on in your bank account, all those debits that you're spending at you know where. Second part is, we don't care about credit utilization, but we do care about your credit score. Now, of course, your credit utilization is a factor in your credit score, and then your credit score is a factor in many other things of your mortgage. But we're not like, oh my gosh, this person is like at 70% utilization on their Chase Sapphire card. If you get a new job, it's not preferred. It is not suggested. I don't recommend it. However, life happens. If you have to take a job, maybe your contract's being stretched out and you get a new job and you have to take it, absolutely take it. But what you're not going to do, you're not going to go from W-2 to 1099. You're not going to just leave your job completely and just hang in the wind, because our biggest thing is, are you still employed? Is it comparable? Are you making the same type of money or more? Are you still working in the same type of capacity, like full time? Is your pay status the same? Is it W-2, etc.? Things like that. We do not care about your Credit Karma score. We care about our scores. Credit Karma is a consumer report. Banks have their own reports called a tri-merge credit report. And it is what it is. That concludes our Mortgage 101. Congratulations, you guys have graduated from April School of Mortgage. Thank you guys always for joining me. You know how much I love teaching. I want you guys to comment below what you need help with, because I had to make this video because you guys know how detailed I can get. And the Mortgage 101 was the foundation that I was like, wow, I don't know if I ever told them like the for real basics. So now that you guys know what goes into getting your mortgage, check out my next video so you'll know how to hire a lender and a realtor and how they should be working for you. So if this was of value, subscribe and share with a friend.